Hi everyone, good afternoon. This is Richard Perry again for my latest webinar in my series Tips to Save You Pips. I hope everyone can see the presentation okay and can hear me okay as well. Don't forget you can talk in the chat box and put anything you like in there, although it's got to be clean to a certain extent, I suppose. Anyway, I'll get going because once again I've got a fair bit to get through. It'll probably take me about 20-25 minutes or so. And then hopefully we can talk about markets. Lots to talk about as ever. Right. So, tips to save you pips. Our experts tips. This is my final webinar in the series, and it sort of brings it all together really, and sort of drags together my experiences that I've had through the years. And I mean, I've talked about trading strategies and the understanding emotion trading and how trade management can benefit you, etc., etc. So I wanted to just finish off today by just giving you some of the things that I've picked up, and hopefully I can just impart a bit of knowledge on you, and hopefully that can help you through your trading. Right, before I get into it, right, there's the disclaimer as ever. You have to look at it because I'm going to talk about live market information in the latter part of the or the second half of the webinar that you need to have read the disclaimer for. So please read and understand that. I will show it to you again at the end. Very briefly, because it gets boring, my biography: 14 years in the city, FX and equity analysis, doing technicals and fundamentals and just looking at markets really. So I've got a STA diploma, and hopefully that gives me a little bit of grounding to talk to you today about stuff. Right, the agenda for today. Now, as I said, it's just a few things that I've really picked up really, and it sort of drags into probably, well, 12 tips in all, but 6 main sort of topic areas, I suppose. And just first of all, starting out in trading. Second of all, just keeping your feet on the ground. Third thing I want to talk about is just acceptance and also risk management. Fourth thing was how you actually generate trading ideas. Then the number 5 topic is about technical analysis, which is a little bit of an area that I have, well, expert knowledge, although you could argue who's an expert these days with these crazy markets. Anyway, and finally, what you need to be aware of in terms of driving the markets. And then we're going to do a little bit of live market analysis, looking at Forex, majors, indices, and commodities. As ever, please write comments in the chat box, because it's good, because last couple of webinars we've had a lot of feedback, and it's been very good, entertaining stuff. People are giving me ideas and feedbacks and stuff to look at. So please, if you've got any trades that you're looking at, I'm happy to look at them for you and perhaps give you a little bit of help too. Right, now first of all, starting out, now tip number 1, you're not alone. I would say that this is, when you're starting out, you need to try and use the experience of other people in your analysis and your trading. Use your broker as a resource. Your broker is there basically to help you to derive your trading strategy and sort of put you on the right path, really, I would say. He's a professional, so I think that's going to allow you to just get the strategy that's right for you, and you can talk it through with him. And these guys have been sort of trained, and they know what they're talking about, one would hope. So if you use your broker, that will help you, I think, further down the line. Now, social media is another one. I think some people think social media is not. It's just full of a bit of hot air, and it's not all that great. It's people self-promoting themselves. I actually sort of, to a certain extent, I disagree with that. I think that there is a lot of good stuff on social media. I think Twitter is a very good resource for news flow, and I think that you'll get a fairly decent sort of almost like a community feel on Twitter. I think it's a very good site to use. Also looking at trading sites and forums, again, a similar sort of thing to Twitter. Trading forums are very useful. Certainly if you're sort of missing a little bit of information you need to sort of fill in, maybe people giving you trading ideas, looking at things maybe you've missed, and just I think helping you really, because effectively it can be quite a lonely feeling trading sometimes if you're just sitting behind your desk just trading on an electronic screen. It can be a little bit lonely, and I think using these sort of social platforms can be very helpful to that. Now, number 2, start easy. Does it start out easy? Don't try and run before you can walk. If you can back test your ideas, I think that would be ideal. But if you're not able to do that, then I would say trading on a demo account can be extremely helpful for molding your strategy. On a demo, you can see how your trading strategy can impact on your account, and I think that's very important. And if you sort of start out on a demo, it also allows you how to learn how to use the platform in a safe environment. I think that's the sort of that's the big takeaway from the demo account. You can play around with it, and whilst it gives you a synthetic view of the market, you can certainly test out your trading ideas with it without the risk of using live money in the market. However, I would say that once you're reasonably comfortable with your demo account, I'd say start playing live money in the market, because you do get different feelings and different emotions from trading live in the market, and you need to experience that. And I would say in that environment, trade in a very small size at first, so you can get used to the emotions that you're going to feel, and so that then you've sort of allow yourself to learn how to trade without taking on too much risk. If it is possible, and if you can sort of come to a bit of an agreement with your broker, perhaps even run a live account alongside a demo, so you're sort of dipping your toe in the water, but you're also sort of playing around with your demo account still. And I think these can all help you, certainly in the early days of your trading. Now, I'd say also the fact is, if you start out as small as possible, that sort of gives you an idea of how the market works as well. So on MT4, the smallest trade you can take on is 1 micro lot, which is a risk of around about 5 cents per pip. So say, for example, you had a 50 pip stop loss. That means you would only be losing $5 on a trade. So I think that's a pretty decent way of trading it. And as I said, look to increase your exposure when you're starting to feel comfortable, and sort of increase the level of risk in your trading. And so just basically just understand that trading live in the market is very different to trading on a demo account, but I would still say trading on a demo account is very important too. Right, number 3, give yourself a target. Now, again, this is you could argue this is a bit of a controversial one, and it depends entirely upon the trader, really, your trading style. But a lot of traders find themselves setting a target can be very useful, and try and stick to it, because it can help you with the psychology. So if perhaps you sort of portion your trading into maybe weekly segments, and I would say weekly rather than daily, because individual trading days can be very different events. But certainly across a week, I think you get a decent sort of trend going in terms of how you're trading. Maybe set yourself a fixed number of pips, or even a monetary value for your trading, and once you've hit that target, maybe sort of just finish up for the week, or finish up for the week and just do something else. Or if you've hit your target and you've sort of gone over your target, and you do see a trading setup that you feel really comfortable with and really happy, high conviction, of course it needs to be in line with your trading strategy, but if you feel high conviction in it, now then maybe look to trade in a reduced size, or look to use any excess over your target to have a free trade at that point. Because the whole point of what you're trying to do with giving yourself targets on a weekly basis is to sort of get into the mindset get out of the mindset that you need to always be trading. Because certainly I think it would be quite a significant mental blow if you've set yourself a target, you've hit that target, and then you continue to trade after that, and you start eking away at your profits, and they start dipping again back downwards. And I think that's something that you should probably try and get out of the mindset of. With regard to losses, I mean, if you do complete a loss for the week, maybe add that loss onto the target for the next week. But I would say that it's important for you not to roll over more than 1 week, because it could begin to impact negatively on your psychology. Certainly, if you do continue to roll up all your losses and ever increase your targets, you may well find yourself sort of feeling the need to increase the leverage in order to claw back the losses. And I think that that's sort of delving into the realms of over trading and over leverage, which is a problem that we sort of talked about last time out. Number 4, trading a trading diary. Now, I would say keeping a trading diary is a good way of finding out a lot of things about your trading. You can find out whether they're recurring mistakes that you make, and maybe you can then set in motion ways of trying to deal with that. You can also see what's working for you as well. So I think that if you're looking at the markets on a every day, all day, every day, then it can be rather exhausting. So try to figure out if there are maybe times of the day that you're seeing that your trades are performing best. Maybe then stick to them, because there are obviously going to be times of the day when perhaps you're more productive in your trading, and then focus on that rather than just spending all your days looking for trades, and exhausting yourself that way. I mean, perhaps spend, say for example, if you find that you trade really well in the European trading hours in the morning, and then as the US comes in, you put on a few trades and you see them moving around rather erratically perhaps, and you losing a few trades. Maybe use the afternoons then as a time to sort of do some more background work, to sort of back testing, thinking about your strategy. Because I think sometimes it's also a good idea to take a step back and assess what you're doing. Right, point number 5, know your limitations. Now, I've sort of talked about this previously, but you need to accept that you're going to make mistakes, and every trade is going to go through a bad patch every now and again. And it's how you deal with those losses, which not only affect on your current outlook, but also your future trading. Now, if you can critically analyze your trading and your trading decisions, then I think you're going to be able to far more readily accept your mistakes. So, I mean, if you can grasp that concept, then I think that you're going to be able to prevent from making future mistakes and sort of again falling into the trap of over leverage and taking on too much risk, etc., etc. So, I think the crucial thing that you're trying to get away from is not to chase your luck. I mean, I've previously spoken a lot about emotion trading, and speaking a lot about emotion trading and the acceptance of you being wrong. And I think that there can be a good time in the day for you to just shut down and walk away, because I think it takes a strong trader to actually be able to do that. The idea is that you're trying not to let a bad day get worse by over trading. Let me just see. I've got a question. Hold on. When will we get a video link of this presentation? I'm going to be uploading any video. Well, we are recording this presentation, so I'll be uploading the link to the website in due course. Probably maybe this evening, but more than likely potentially tomorrow morning. But it will be there quite soon. Right, number 6. Consider the concept of risk in your trading. Now, I mean, daydreaming about what you're going to spend your profits on probably isn't going to make you the most successful trader, because you're going to be head in the clouds and you're not going to be in the right mindset to being successful. And I think you need to think long and hard about the risks involved in trading. You need to ask yourself, what can go wrong with this trade and how can I manage the risk? They are 2 massively important questions that I think you need to ask yourself on any trade that you're doing. Now, I've spoken a lot in previous webinars about the use of stop losses and that can help manage risk and potential downside, because again, this puts a lot of structure into your trading. Certainly in the early days of your trading, I would implore you to use stop losses because they are very important, certainly as you're sort of getting to grips with trading. I mean, again, I mean, in the webinar on stop losses, I did talk about the fact that I spoke about the fact that maybe the most successful traders or the gurus that they call themselves maybe don't use stop losses well. They're really experienced traders, so you need to just accept that. I think for the level of trading that we're all at, I think you probably should be using stop losses. Right, onto analysis. 7.78. Now, point 7, do your research. I'd say you need to take time to think properly about your trading strategy. I mean, that sort of ties in point number 1, which is sort of talk to your broker and think about your trading strategy. But really have a good sit down and think about what you're trying to do with your trading, and how you're going to use your trading trigger signals. Now, if you're a technical analysis trader, think about the different indicators that you're going to be using. If you go on our website, there are a whole load of webinars that we've got. Actually, I can do that now. Why not? Yes, let's do that. So if you go on the website, you can see Education and Tools. Here, you've got a whole load of webinars that I've done in the past that you've got handouts with, and they can sort of take you through different technical analysis tips and techniques. So I would say have a look at those because they can be very useful, especially the PDFs, I would say. Now, they are my favorite technical analysis indicators. It doesn't necessarily mean that's an exhaustive list, because obviously there isn't an exhaustive list, but you need to figure out what works for you when you do your analysis. I would say that the scattergun approach to analysis can, where basically you're using just massive load of indicators, doesn't always work. You need to sort of whittle it down. I use a list of maybe 5, 6, 7 indicators in my trading, and I use them on a daily basis, and I find that works for me. Doesn't necessarily mean it worked for you, but that's for you to work out for yourself, I'd say. I use price and momentum again, but it doesn't necessarily mean that they would work for you. But find the ones you're comfortable with, and mostly importantly, the ones that you understand. I mean, I say this a lot, but analysis doesn't necessarily have to be complicated. So just oh, that's number 8. But anyway, I mean, analysis doesn't have to be complicated. So that which takes me on to point number 8. Anyway, don't get bogged down with over analysis. Sort of, I suppose this sort of mixes in with the end of the last point, but I'm trying to say that what you need to do is, I'd say you've got your own analysis that you can do and read and take time over. I would say maybe if you're on the more novice end of the scale, I would say have a look at other people's analysis as well. Again, this is the point at which I'm saying don't get bogged down with too much over analysis, because you can read other people's analysis. If you maybe read 5 different analysts on a daily basis, maybe they're going to all come out with a different view on euro dollar, on cable or whatever. So it's not going to help you. But if you read and understand someone and you follow them and like what they're writing, maybe just follow them and maybe one other, just to give you a bit of a balancing view. But give yourself, I think, an opportunity to not get too sort of bogged down with over-analysis and too much complication in your trading. I'd say that reading other research can give you a decent perspective on the markets, but again, keeping it simple is the main way of doing it. Don't confuse yourself, basically. Right. Now, I suppose, I mean, just drawing it back into another presentation that I sort of talk about is just, it's a similar thing to the paradox of choice, basically, where there's paradox of choice is a behavioral finance term, which is where there's too much conflicting information that can stymie your trading, can really sort of hamstring what you're trying to do, and yeah, just try and sort of whittle it down to the minimum, really, because if you've got too many options in your trading, too many different ideas flowing around your head, you can get buyer's remorse when you do put on your trades, and that I think can mean that you get scared and sort of exit your trades too soon, and etc. etc. So just be aware that keeping it simple is the best way of doing it. Being a master of a few indicators in your analysis can and is often the best way of trading it. Okay, my technical analysis tips. Now, the best technical analysis tip I can give you is number 9: the trend is your friend. Now, anyone who's been through any of my webinars or listened to what I've been talking about in previous webinars knows that I am all about the trend. My whole sort of analysis techniques see that the trend basically is the most important technical indicator out there. The trend is your friend. Everyone's heard that saying, or everyone who's been studying technical analysis would have heard that saying. And the reason is because it is very, very much true. Markets do move in trends. And even if you're looking, say, for example, on a 1 minute chart or a 1 week chart, they're all still moving in trends. Now, the longer term the trend, and the more well defined the trend is, the more reliable it will be. And if you can identify the trend, and subsequently what the idea being that you want to trade in the direction of that trend, then I think this gives you the biggest sort of chance of success when you're trading Forex. In my experience, and I have to say I made a lot of mistakes early on in my career. I used to try and sort of see little reversal patterns everywhere and think, oh, well, that's a reversal pattern, definitely. Reversals do not happen as often as you think they do. Trust me, the prices move in trends a lot more than you'll find reversals. And the sort of quicker you accept that, I think the more success that you'll find in your trading. It was a massive mistake I made early on in my career with sort of seeing reversals everywhere, and I was wrong a lot of the time. So with regards to trend as well, the fact is that a lot of indicators, certainly the ones that I use on momentum and a lot of price indicators, run off the trend. So once you've found the trend, you can then start to decipher other indicators. And I think trend analysis is very important in your trading, and should certainly on short-term trading should be a very important aspect as well. Point number 10: trading the ideas with the highest conviction. Now, again, it sort of goes back to another point that I made earlier. Now, I don't think that you need to trade often to be successful in trading. A lot of the most successful traders will trade maybe just a handful of positions. Actually, hold on, I've got a few questions here. Maybe hold on one sec. What is the best time you should suggest for beginners? If sorry, that's from Bill. If you mean trading time horizons, then it's, well, it depends on your timescale of your trading, really. It all depends on how often you want to be trading. But again, you've got to find out that through your strategy. So yeah, it is much of a personal decision. That, sorry, Bill, that's not massively massively helpful. Right, yeah, sorry, back to point number 10. Now, trading the ideas with the highest conviction. Yeah, as I was saying, I don't think that you need to trade too often to be successful. And for example, as I said, a lot of the traders will only trade a handful of times a week. I mean, the people who trade multiple times a day, depending on your risk per trade, I think obviously importantly, that can be successful. But the more, basically the successful traders are looking to trade the positions or the ideas with the highest probability of success. And I think this is a lot of the time. I think this is why retail traders or maybe novice traders are a little bit haphazard with their trading early on. They trade lots of different ideas. And they don't trade the ones with the highest conviction, and the more experience you get with the trading, I think the less number of trades that you end up putting on. So keep that in mind as well. For example, in my trading, I use the law of multiple confirmation, which is something I've come up with, basically where I just like to see confirmation across a whole number of different technical indicators before I pick out the positions that I want to play. So if you start to see a lot of confirmation across a whole range of different indicators, then you're going to get a much higher conviction. And as I've got in the little yellow box here, key tip: confirmation leads to higher conviction. And if you get confirmation, you can trade with a much higher degree of confidence. Right, number 11. Don't trade with your eyes shut. Now, basically, this is where I sort of get into a more panoramic view on the markets. Basically, you've got different aspects of analysis and different ways you can trade. News flow, key economic announcements, fundamentals, technicals. I like to have a nice broad basis on my trading. I would say locking yourself in a room with nothing but your charts is not necessarily the best way for success, because certainly for short-term trading, you need to be aware of a whole range of different factors that can affect prices. Now, that doesn't just include technical analysis. Sometimes you'll get a price making a sharp move and you don't know why. If you're not paying attention to the data announcements and the key economic announcements, you may be caught on the wrong side of a trade, because basically, I mean, if you know what the news flow is, or when the announcements are going to come, then you can be prepared in your trading. You can adjust your stop losses accordingly, or perhaps even take your positions off the table. Now, for example, recently we've had a whole massive amount about Greece, completely critical for market sentiment, turning positions on ahead. Also, we get the economic calendar, sort of non-farm payrolls, whatever, and these announcements can massively turn the outlook for Forex pairs in an instant, and you need to be aware of that. So if you're not prepared for huge fundamental events, you can find yourself exposed just at the wrong time. And so I would say learn the economic calendar and make sure you have understood it. And number 12, sort of an extension of that, really, sort of the risks of holding positions over economic announcements. If you've learned your economic calendar and understood that it can have a key impact on your trading, any position, say for example you're trading euro dollar and you've got a massive announcement out due on US inflation, that is going to have a big impact on your position if you hold it over 1:30 UK time. So you need to be aware of these things and be prepared to adjust your positions accordingly, because you're going to get elevated volatility. And essentially, I mean, the key word I think in economic announcements is surprise, because you get positive and negative surprises, but the fact that it's a surprise effectively means you're turning it into a 50-50 trade. You could have done all the analysis in the world, but if you're trading it over an economic announcement and you get a big surprise, then you're going to get a massive move. And regardless of whether the technicals are set up perfectly or not, you're going to get a huge move either way, obviously in the direction of the surprise. So, for example, if you're running a tight stop, maybe you'll get jumped out very quickly. I mean, it could work on the benefit side of it. You could be the right side of the trade and it goes massively in your favor. But again, that is effectively luck. So you need to be aware of all that going on. Now, the key announcements that come out are non-farm payrolls, monetary policy decisions, inflation, growth, PMIs. They're all high volatility events, and it sort of sets me up quite nicely for the next series of webinars that I'm going to be doing, which we're going to be holding soon, which is on economic announcements and how these can impact on your trading. So that's for another time, but for now, that is that is all I've got to say about my tips for your trading. So I'm going to now open it out. I'm going to do a quick analysis of Forex majors, gold, DAX and things like that. But if anyone's got any other trading ideas that they're looking at, please give me a shout and I will look at them for you. But let's have a look now. First of all, euro dollar. Right, fine. I mean, seriously, if anyone can help me out on euro dollar, I would love to know where it's going, because to be honest, you've got Greece. Every day something else happens. You get spiking around intraday. Any bit of news flow on Greece just has a massive impact on euro dollar. So the technicals are pretty messed up, I think, on euro dollar at the moment. You still, I mean, just taking a step back, you're still range bound, really. I've been talking about this pivot level at 110.50 for months now. And what do? We're finding ourselves 5 pips away from that and basically trading around it today. Here's euro dollar on an hourly basis. Here's that pivot, 110.50. Interestingly enough, 110.54 is 61.8% Fibonacci of that huge bull run that we got from May to June. Again, a pivot level. Again, Fibonacci acting as an interesting factor in this chart. Now, I've zoomed in a little bit. I mean, that we did have. I got quite annoyed this morning in my morning report, and if I got a little bit. Hold on a sec, sorry. Baidu. Ben Webster, sorry, Baidu. Says Baidu looks like a good trade. What do you think about that? Crikey. If you've got a code, I'll take a look at it, but I've never heard of that. Or Baidu. So yeah, just help me out a little bit there, Ben. Sorry, back to Eurodollar. Yeah, so I mean, you look at these hourly indicators; they're basically flattening off now. So I think the market is basically just setting itself up for what's probably going to be an incredibly high volatility event on Monday. I don't think it's going to go very far in the next couple of days. So yeah, Eurodollar. It's a very, very tricky one at the moment. It's just basically based on news flow. If this meeting at the weekend, if that comes out, and the Greeks, well, if the Greeks don't agree and their creditors don't agree, then we're going to have the most likelihood of a Brexit, and then I think the euro dollar is going to have a big tank to the downside. But where do you see Greece going from Bill? Yeah, exactly. Where do I see it going? My base case has always been, I think they're going to come to some sort of agreement. I mean, it's been painful. It's like pulling teeth. But I think they're going to come to an agreement. I think the political will of Merkel and Holland, and also, interestingly enough, now we're seeing the IMF coming out with far more accommodative rhetoric about Greece in terms of debt haircuts and restructuring, debt profiling, and all that stuff. I think it just sort of moves us towards the likelihood of an agreement this weekend. Think about Merkel's legacy. Her legacy is being tainted already by this, and she doesn't want to be the politician that broke the Eurozone. And I think that's what it could be, because that could set off a whole chain of events if Greece does ultimately leave the Eurozone. It's could be a very painful situation, certainly painful for her legacy. So I don't think she necessarily wants that at all. But it's a massive moving object at the moment. We don't know what it is, how it's going to play out. Right, hold on one sec. Oh, right. Sorry. Okay, so Baidu. Okay, fine. In China. See if it works. Yes, it does. There it is. Baidu. Okay, fine. Well, we can draw in some downtrend lines that are pretty decent actually when you think about it. That's a pretty decent downtrend channel. You just rallied off that. Obviously, in the last few days or a couple of weeks, you've had a sharp correction once again in line with the Chinese stock markets, although Chinese stock markets are actually generally speaking much worse than that, but certainly there is a consistent sort of downtrend channel that you need to play. Obviously it's unwinding from oversold, technical buy signal near term, stochastics crossover. I mean, similar sort of situation to what we had back in May when you had pretty decent run higher actually. So it's gapped higher. It's not gone away, but I mean, I suppose it does tend to gap quite significantly, this chart anyway, so maybe just no, don't really think about the gaps too hard. But yeah, it certainly looks like it's trading in this downtrend channel. And it's on the rally at the moment, but it doesn't look to be a long-term rally. I hope that helps you. Let's go back to our Forex. GBP equals. Right, sterling. I've got really annoyed about sterling this morning. Again, something else I got annoyed about, sorry, was the fact that you had the move back below the key 54.50 level, which continued the downside move, and almost now I think takes cable into well, obviously continuing this corrective configuration you've got, but now into a more neutral, at best, scenario playing out. You see these consistent, strong runs you get cable going on. And obviously we're in another one. We're actually into the 4th week of this strong run. It tends to be, just looking at this, 1, 2, 3 weeks, 2 weeks, 3 weeks, 3 weeks, just over 3 weeks. So, I mean, I don't really look at time cycles, but I'd imagine that would possibly lead you to suggest that perhaps you're coming to a bit of a time cycle low in cable, but still the indicators on the momentum are pretty weak actually. Those stochastics are looking pretty bad, and what I'll do is the fact that you've, on the hourly chart, zooming out, the fact that you've sort of fallen below the 61.8% fib retracement level, and you've found resistance at that level as well. That's not great. Momentum indicators, the hourly is consistently falling when the hourly RSI gets towards 60. That's a bearish configuration, and it goes back well below 30, so that is bearish configuration. MACD lines continue to fall bearishly and sort of fail to get back above neutral. So generally speaking, cable is still in a pretty negative mindset, I think, here. Doesn't look great. Right, hold on, I've got a question. Sterling dollar could be getting ready for a rebound from Bill. Well, yeah, I mean, it's the only reason I'm saying that is because of the I mean, I haven't done a proper analysis on this, but just the time basis of it, you tend to get these runs lasting for 2 to 3 weeks on cable, both higher and lower, and then you get a turnaround. So it's that's a very loose and very lazy technical analysis of that, but just keep that in mind, that you do tend to see these runs maybe 2 or 3 weeks, and this one is actually into its 4th week, third week, sorry, and it'll be interesting to see if it can recover. If it can recover back above that 61.8% fib level, I think that maybe it'll start to possibly think about a rebound, but momentum indicators are still pretty negative at the moment, and it doesn't look great. As I said, that rally that formed resistance around that 61.8% level and fell over doesn't really put it in great light. And if you look at the falling moving averages across the board, again, it's not great. So there's a lot to be done on this cable chart, I think, for it to turn around. Just zooming in here, you've got also the resistance that's coming in now On a near-term basis, you'd say that resistance of those old lows from what day is it today? Thursday. So those old lows from Tuesday, around that 54.15 mark, and finding resistance underneath that level now, sort of rolling over a little bit to a certain extent. MACD lines unwound. So, in fact, that would probably suggest that is a bit of a potential selling opportunity now. If you're going to continue to trade this correction or this downward phase that we still have cable in. JPY. Now, again, another one where I was very happy about the fact that dollar yen was forming support around that 22 figure. My thoughts were it was going to find a new low around 22 figure, but it's now subsequently gone below that sharp sell-off yesterday. The rebound today has found resistance at 21.53, the 61.8% Fibonacci retracement of that bull run. Those Fibonacci levels that certainly between 50 and 23.6, that was consistently being used as pivot levels. Fibonacci levels do work very well, do tend to work very well on dollar yen. Let's just quickly have a look at where JPY equals. Yeah, this is the hourly chart on dollar yen. Look at that, finding resistance throughout the day today. So that would suggest that Fibonacci levels are consolidation levels. They can be potentially turning points as well, but that is certainly a consolidation. And if you saw a break above that and a close above that on the hourly chart, then theoretically you're going to move back towards 50% and back above that 22 figure old support, which is now new resistance. But there is a lot of resistance, I think, around 22 figure now. Interesting that we've already had the hourly chart momentum indicators unwound back towards 60 and fall over. MACD lines falling or beginning to roll over. Stochastics rolling over as well. So perhaps this is the limit of that rally, 61.8% at 121 at 54. It is obviously turning into a bit of a key pivot level near term. So if you saw a decisive break above that, then yes, it certainly is a potential selling opportunity. Right, let's go to the Aussie. I know a lot of you like Aussie on a trading basis. Oh, why has that happened? Very occasionally that happens to annoy me. Right. Okay, what I did earlier, just before this webinar, was I did a fib projection of this selling pressure in May that had a subsequent sort of consolidation pattern and then broke back below again. Now, look at the fibs on this chart. Very interesting. You had a consolidation. Look at the fact that underneath 61.8% projection is resistance. And that gives us a downside target, that projection of 72.82. Now that is certainly a continuation of this selling pressure that we've seen. Aussie looks pretty bad on a technical basis anyway. Starting to possibly maybe turn a corner on the stochastics, but RSI can obviously go well below 30 and consistently, as it did back in Jan. So it certainly looks as though why is that happening? Okay, fine, let's zoom in properly. Yeah, the selling pressure that we've got on Aussie, I think, is going to continue. I think the fact that we've broken above 75.30, again, that's a big sort of area of old support. If you zoom out here, that was those old key lows. And I think, yes, just generally speaking, the Aussie is under pressure. So selling into strength on the Aussie, again, falling over today. Yeah, there's a fairly sizable element of resistance there. Momentum indicators went a little bit further than perhaps you would have expected, but on the rebound. But I still think it's going to be ultimately a sell into strength on Aussie. Now, the interesting one that I found, or I say found, that I talked about this morning in my morning report was the Kiwi, because you've got this lovely downtrend channel on Kiwi. In the last 3 months, this has been a superb downtrend channel, and rallies are a chance to sell. That continues to be the case. We've had this rally that's engaging at the moment. These momentum indicators, certainly on the daily chart, do not suggest that you're going to get too much, do not suggest that it's bullish in any way at all. You look at this, get the crosshair going, RSI around 45. That would suggest in rallies falling over 45 is a really bearish configuration there of the RSI. So if you saw the RSI starting to push above, I mean, you could argue, is that a buy signal on the RSI because you've had a cross back above the 30? I would say no, because basically you've sort of been bumping along the bottom, and I think you're going to get a series of false signals in that scenario. So my positive signal that I'm looking out for on the Kiwi now would be a move above these sort of reaction highs on the RSI. So above 50, let's say, for example. Similar sort of story on the stochastics. I don't think that's a buy signal. I think that's just playing out the similar sort of situation that we saw back in May and June, where you saw these crossovers, but I think that they were just sort of little technical rallies that you could sell into, and I think that a selling opportunity is going to come if you saw a continued rally. I think around that sort of 68 figure level area, I think that would be ideal. 21-day moving average has sort of now become this flanking resistance, turning over and becoming resistant, so watch out for that at 68.40. So the 68 figure area I think is ideal for a selling opportunity. Now, having said that, you've got this resistance that comes in 68.10 area, old support, new resistance, so 68.10. So quite a few reasons why a 68 figure area is a pretty decent selling opportunity if you saw it on the Kiwi. CAD is another interesting one. Oh, crikey, what's going on there? Unbelievably annoying. Okay, let's try that again. Right, dollar CAD. Now, the reason I find this interesting is because I did a Fibonacci run of this May rally to June correction, projected higher. 100% of that projection is 127.70. Reaction high 127.79. Incredible. Interesting. And that comes as RSI's over 70. That comes as we've had a bit of a negative candle, but obviously it's a bit of a rally back higher again today. Let's see what happened on the hourly chart. You're sort of seeing this consolidation really. And the consolidation obviously is coming around that 100% fib level. Again, consolidation at around a fib level. 3 days it's been consolidating arguably around this fib level. And in those 3 days, that RSI has gone above 70. So the fact that that's happening, the fact is there's a massive resistance. Look at that resistance around 28 figure. What was that? 27.97 on this Reuters chart, but 28 figure seems to be a massive resistance area. So the fact is you've had this bull run through the last sort of 3 weeks. RSI's at 70, massive overhead resistance. You've seen 100% Fibonacci projection of the run. Is this now a point at which we're going to start to see the CAD sort of the dollar CAD, I'll rephrase that, dollar CAD, finding a bit of resistance? It will be very interesting because, again, I mean, the dollar last couple of days has had a bit of that cable chart, a little bit of a correction sorry, a little bit of a rally on that cable chart after big selling pressure. Little bit of a correction arguably coming through on this CAD chart, although at the moment it's just a consolidation. And in fact, in the last hour, we've had a sharp rally again, but certainly what are my indicator configurations? I'm going to pronounce your name probably incorrectly. I'm going to say Dogan. Now, what are my indicator configurations? Now, I will help you out with that very quickly by putting in my legend. Right, RSI 14 days, and it's simple as well, or simple calculation on the RSI, and 14 days Wilder smoothing. MACD lines 12, 26 and 9, so that's 12 and 26 of the moving averages, and then a 9-day smoothing of that indicator of the two prospects there, and 14.33 for the stochastics. So 14 periods and then 3 days, and 3 days for both the slow stochastics there. So I hope that helps you out here. Now, in terms of my moving averages, I always use Fibonacci levels on my moving average. So 12. So 21, 55, 89, and wow, that should be 144. I apologize. Lord knows why that was 200, but 144. Again, similar story across all time frames. I use the same indicators. 21, 55, 89, 144, and the same configuration on the momentum indicators as well. So hopefully that helps you there. So, CAD, are we reaching a top area? Potentially. Now, I can't say yes for sure, because one mistake you need to avoid is assuming support and resistance. This is at the moment a consolidation. It's not actually definitely going to be a turning point. Now you're now looking out for sell signals. If you saw the RSI selling coming back below 70, that would be a potential sell signal. Certainly the stochastics rolling over as well and turning back below 80 would be a sell signal. So a couple of indicators there. I do warn you on this. Dollar CAD basically last few months gone sideways, so MACD lines are not a great indicator on that in that scenario. Right, not got too much longer, so let's quickly look at gold. Gold, it's a very interesting selling line that we have on gold. I've drawn in here a downtrend channel that I've sort of only really saw in the last day or so. Big downtrend channel on gold, rally back towards the top of the downtrend, and are we seeing the next sell signal? Seeing the this is the hourly chart, RSI sort of back towards 60 area and potentially rolling over. Stochastics already, that's, yeah, I mean that's arguably, and I say arguably because it's not really, you could say a bearish divergence. There is a bearish divergence on the MACD histogram. Just get rid of that and zoom in. Bearish divergence on the MACD histogram. So if you start to see the MACD lines turning over and giving a cross sell signal, maybe that is your sell signal on gold. But I'm selling rallies on gold, and this could be another rally to sell. Big overhead resistance 1170 and also 1174, 1174, 1175, which is Monday's rally high. But every time you see any rallies on gold, it's basically treated as a sell signal. Bill's asking, am I going to write a book one day? Wow. Well, I cannot say that I am at the moment. We'll see what the demand is for it, but I can't imagine it's particularly high. I'm very flattered though. Now, okay, so gold. Yeah, I think just selling into strength on gold. You've got these rallies in the last couple of days. Momentum indicators are still negatively configured. perhaps sort of stochastics bumping along the bottom a bit. I think just using any rebound as a chance to sell, really. 1170 is your sort of key resistance line, I'd say. Between there and 1175 is pretty decent as an area of resistance. Maybe you should look out for. But at the moment, we're still trading in this downtrend channel. And again, it sort of seems to be falling over in that today. I mean, you can imagine that chances are that the way the markets are going at the moment, they'll be completely blown out of the water on that downtrend channel. But even then, I think anything up towards that 1174, 1175 area, I think is a chance to sell on that. Right, let's go DAX. Last chart, DAX. And I'm probably setting myself up for a complete fall here because the DAX has been all over the place. Furthermore, my Reuters chart has decided to stall. Okay, fine. .g DAX. Massive rally again. Not on a great deal, to be honest. I mean, the fact that you've not had a deterioration in the Greek negotiations and anything today, I think, and you've had this big rally. Is it sustainable? Probably not. Probably not. I mean, it is moving around on news flow more than anything, I think, on this. So you've had this move. I mean, on this chart, I've got a load of lines, old supports and resistances and pivot levels, and 10.8 was a big level that broke down. But then obviously you had a bit of good news flow and bang, turn around again. But I think that basically you need to be looking around this again. 11,167, I think, has tended to be historically a pretty good level over the last few months. But at the moment, I think you need to be just basing your DAX trades around news flow on Greece. I think technicals at the moment are a bit of a, well, it's not a very easy chart to trade on technicals at the moment because it is so volatile and it moves turns on a sixpence, moves all over the place. So I think DAX is a very tricky one at the moment. But on a general basis, you would argue lower highs, lower lows. And it continues to do that. So maybe you're using rallies as a chance to sell on DAX. But again, it's not a massive sell because RSI never really gets towards 30, rolling over around mid 50s at the moment. So maybe use that as your gauge in the last few months. 50s, 55 has been a basis where the RSI keeps rolling over. Stochastic sell signals seem to be working pretty good, but generally speaking, your sell signals on DAX give you much better signals than your buy signals, I would say. So just bear that in mind. But at the moment, DAX is a very tough trade, tough call. It's very much linked to Greece. Right. So let me just say, we do, I mean, I sort of briefly touched on it earlier. We've got market research on our website that I write on a daily basis. That's all there on hantechfx.com /market-research. All my stuff I put through Twitter as well. So if anyone wants to follow me on Twitter, then please do that. And also, I'm in a lot of LinkedIn groups as well. So Forex Trader is our LinkedIn group. So it's all very entertaining stuff. So yeah, so at that point, I will wish you good luck in your trading. And there's the disclaimer again. So please have a read, and I wish you good luck in your trading. And I will speak to you when we put our next webinars on, which are on, as I said, the on the fundamental indicators and how to trade them and what to look out for in the indicators. So thank you very much, everyone, for lots of good feedback again today, and I'll speak to you next time.